This is an audio recording of the LendIt Fintech Weekly News Show. The show is streamed live on LendIt TV, LinkedIn, YouTube, and Twitter at 5 p.m. Eastern Time every Thursday. In this fast-paced show, the LendIt News team and a special guest discuss the most important fintech news stories of the past week. Good afternoon, everybody, and welcome to the LendIt Fintech Weekly News Show. My name is Peter Renton, Chairman and co-founder of LendIt Fintech, joined as always by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm good, Peter. How are you?
And I'm great. And coming at us inside what looks like a wall of whiskey behind him, we have Andrew Dix from Crowdfund Insider. How are you doing, Andrew?
I'm doing fine. Thank you, Peter. Good to see you, Todd.
Good to see you, Andrew.
Okay, well, let's kick it off because we got a lot to cover today. Want to kick it off with the executive order from the president on crypto. Came out yesterday, and people are calling it a watershed moment. I don't know if I'd go that far, but it certainly provides a little bit of clarity for the crypto community. 6 key parts to the order: consumer investor protection, financial stability, illicit activity, U.S. competitiveness on the global stage. Glad they put that one in because that is key. Financial inclusion and responsible innovation. And then at the end of the report, or at the end of the order, he talked about CBDC research and development as well. So anyway, thoughts, gentlemen?
I'll let Andrew go in on more of the deep dive policy. But I thought it was kind of funny to see how ballyhooed, I guess, the announcement was when, there was not much to the actual executive order. It was basically calling on the different agencies and whatnot to kind of begin their coordinated approach to it. So I think it puts more a seriousness behind some of the stuff. And I think there's different timelines and everything in there. So I think there's still a lot to be determined. I think a lot of what's going on in the world with Ukraine and everything is really a key aspect to it in how they can really leverage sanctions. And so I think there's a ton still that we need to have figured out. But I think it's certainly a step in the right direction. A shameless plug, when I recently had Adam Dell on my podcast from Domain Money, who basically said, it's never been the case where policy leads the way. Kind of the economy goes and policy falls in behind it, which is certainly feels as if this is the case here. The market's moving, and then obviously the regulators are starting to get a handle on it and everything. But Andrew, you can give more of a deep dive on the specific policy stuff, as he's more of an expert on that. But I thought there was a little bit over the top announcement of it personally.
Yeah, I'm not going to disagree with you, with either of you on this. I think that there was a certain amount of concern due to the events in Ukraine and Russia that they were going to be more prescriptive in illicit activity, but they were not. And if you look at the bullets that they provided, they were pretty high level with very little. Well, you have to do this instead of. We're going to look at this, which, we kind of already knew to a large degree. So I think from, the different sides of the different stakeholders is industry people, they have to rush out and they have to embrace this and they have to be positive. They say, this is a win for us because look, they want to make certain that we're going to be leading in digital asset innovation, which is good. I'm glad they said that. And it appears to be true. On the other side, there's people who don't like digital assets, who probably are going to put a different perspective on things. I thought it was interesting that the chairman of the SEC, Gary Gensler, quickly tweeted how he was, looking forward to working together to pursue investor protection and guard against illicit activity, not mentioning innovation at all. So obviously you have some differences of opinion here as to how it's going to work out. I think that Treasury appears to be coming around to the benefits of digital assets and blockchain technology, and they seem to have started to understand that there are some things that can be helpful for the financial services sector. What was missing, and I'm going to credit Congressman Tom Emmer on this. He mentioned this in a series of tweets, that they mentioned nothing about DeFi or decentralization. It's kind of an elephant in the room. I mean, what do you do with that? They don't know. Nobody wants to really touch it. It's a hot button item. So there's, yes, we have to read between the lines. I thought it was positive. It was, kind of like, okay, cool, when it could have been like, oh no, we're doomed, sort of thing. Right. So I'd say it's a win for the industry. I say overall it's a win for the industry, and they need to bear hug it.
Yeah, I think that's what the sentiment was. It wasn't a loss. That's the big thing that I think people were afraid of.
I think we could start inferring that DeFi is going to lose big in the end.
That's a good, if you want to jump into that, I find that fascinating.
It's just I don't see them feeling or getting comfortable without these, the KYC checks and everything. Like, they're just not going to get to that point anytime soon. I think they're going to try to separate the two issues. And I think they're going to kick the can down the road on DeFi. And it's going to be a shame that they won't even address it.
Well, I don't want to dig in. I don't want to dive into that because that could take the next 10 minutes. Suffice to say that
10 minutes, 10 hours.
Okay,
at least.
Okay. So I want to move on to the war in Russia and Ukraine and the the consequences that's happening there. Just in the past week, we saw over the weekend Amex decided they're pulling out. PayPal is pulling out. That's after Visa and MasterCard had already said they're pulling out. Amex cards, if you have an Amex card, it will not work in Russia. If you have a Russian issued Amex card, it will not work anywhere. And PayPal, a similar thing, but their PayPal are allowing customers to process withdrawals for a period of time. We don't know how long that is.
I mean, to me, it comes down to, at what point are you hurting the wrong people? And eventually you have to unwind some of this when there is some sort of resolution. And what does that look like?
Yeah.
And where do we go from there? Like, granted, I'm not necessarily against some of the, you need to have sanctions. You can't go to war and start World War III. But at what point, where's the line where it's like, is this really hurting who you're intending it to hurt? When I'm sure there's millions of people in Russia that want to just go about their lives. And the impact, it goes in that direction. And then you have to think, when there is an end game, are these companies, are these different rails, are they just going to be turned back on? Some of this doesn't feel like it can just go back on. And then where do we go from there? So there's a lot of layers to this. I think there's been a simplicity to this thus far, in many ways, at least the reporting of it. But I think there's a lot of layers that we haven't fully unpacked yet, and whether or not they really get to the heart of who they want to really hurt. And I'm not sure.
Yeah, I think that, I think you're right there, because it's kind of a scorched earth policy here, and where it impacts everyone. That being said, for the Visa and the MasterCard cards that are issued domestically in Russia, they will continue to operate domestically. So a lot of people will continue to have access to their fast declining ruble, which lost a lot of value in recent days. So I would say that this is kind of a new front in war. This is an economic war right now, whereas, Vladimir Putin's going medieval on us, and he's going to, circle and lay siege. The United States and the West has a pretty strong card with their economic sanctions. Yep. And I think that that they're going to be effective in the near term. We don't really know what's going to happen in the long term. There's always the risk of unintended consequences as to how this will manifest itself. Clearly, it's a better option than bombing St. Petersburg or the Kremlin. And I think that we had to do something, and it's messy. It's not clean. We disconnected 70% of the banks from SWIFT. We went after the central bank, which is going to hurt. We wrote something today where I think the majority of the trade goes through dollars and then other hard currency, because who wants a ruble? So it's gonna have traction. It's gonna hurt. It's not just gonna be the oligarchs or the elites. It's gonna be the wider population. And whether it will be effective in the way we want it to be effective, we're gonna find out.
Yep.
You can't argue with that. I think that I could go on and on and on about this, but I need to cut myself short. I think it's the right move in the near term, but I do think once a resolution is found, we will quickly, reverse gears and pull back.
Right.
Russia is in a bad spot. They talk about partnering with China. China's, SIP system is not in any way, similar to, what is on the global markets or SWIFT or anything. So
right.
Russia isn't taking a beating.
This feels like an off ramp would help, come to a deal quicker. And the more that there's like this line, and they can't restart things quickly, feels like it just lengthens out processes at times. I don't know.
Well, we're not going to get into the details of foreign policy here. So let's move on. Coinbase had a blog post this week, which I thought was really interesting. They talked about the fact that they're blocking 25,000 Russian-linked crypto addresses. These are most of these accounts they've been monitoring since before the war in Ukraine. But the thing that I thought was most interesting, and this is just not being made public enough, and I wish Elizabeth Warren would listen to this. They are not
no way.
They are not seeing a surge in activity to evade sanctions. That's like that. That is basically, you can think about it. And he said, digital assets. This is a quote from the blog post. Digital assets are traceable, permanent, and public. And that's the thing that Coinbase is. If Russian government was trying to evade sanctions, Coinbase would see it. Other people we would see it on the blockchain. And that's simply not happening.
It's a fundamental misunderstanding that many people in Congress, Emmert and McHenry and a few others have a pretty in-depth knowledge of, but many others don't. And that's the part of the letter this week that still makes me nervous for the industry, is that the gap is still pretty wide. And there's a handful that are super knowledgeable and have spent time, probably buy and trade crypto to get a sense, have done DeFi transactions to get a sense of what this is all about. And most are just reading the little paragraphs that are in front of them, put them by the staff. And I know it's a win this week, but it's a nervous win. If I was in the industry, you have to be obviously very accepting of it, but I'd still be a little bit on the edge of my seat.
Yeah. So facts, the crypto market is simply not large enough to be able to materially aid the Russian government. It's just not, you're spitballing. It's not going to happen. So anybody that says, well, the Russian government's going to use crypto to evade sanctions has no idea what they're talking about, like certain senators that we know. Now, could the elites or oligarchs use or try to use? They could try, but as Coinbase and other platforms pointed out, it's very transparent. Sure, there's Monero. It's a privacy coin, but it's not really that private, and the market cap's not that big. So what are you going to do? It's really not an effective vehicle to evade the watchful eye of our government and other governments. And frankly, there's far more effective ways to get around sanctions. So I don't see it happening. Every crypto exchange in the United States or marketplace, whatever we'll call it, they're applying KYC, AML rules and regulations. All the big crypto exchanges in the world are doing the same because of the fast food travel rule, or they're going to, and they certainly do not want to upset the U.S. government or the EU. Right. So they're not going to be letting themselves be used to launder money. I guess, worst case scenario is there's about 300 crypto exchanges in the world, and most of them do nothing in transfers. Maybe you could induce a couple of those, but I mean, it's just not going to happen.
Right, and that's the thing that I think. I think it was Chainalysis I read that they have seen no new whales come into crypto in the last 2 weeks. So no new whales, no new big big crypto movements happening in the multi-billion-dollar sort of crypto movements. It's just not happening. So there's the probably many small time holders of crypto are using it to limit the sanctions, but they're Russian citizens most likely, or
just
Ukrainians.
Look how complicated it was for some large asset managers to acquire 400, 500, 600 million worth of Bitcoin. It takes a lot,
right,
to get that, and it doesn't happen over the span of a couple of days. Right. Yeah, there's a few podcasts that the asset managers explain, it's a lot of work and it's not easy to do. And there's no way that it's I just evaded sanctions like that.
Yeah.
Anyway,
the thing I want one more point before you move on, Peter, is that the thing that interests me about the Coinbase statement was they had stopped 25,000 accounts. It's are there 25,000 rich people in Russia? I thought there were a couple dozen, right? I mean, how many oligarchs are there? But I mean, okay, go on.
Yes. Okay. So let's talk about Better.com, who did not have a good week. Certainly their employees didn't. Laying off 50% of their staff this week. They were, they're up almost to 10,000 people at the height of the height of the pandemic, at the height of the real estate boom. And now they are down to 4,000 people roughly. And this was just, I mean, I think the person who's running HR at Better.com is really not. They continue to make mistakes. Let's just say that severance deposits were received before the formal notice went out to employees. There was no telegraphing this was going to happen, and this came. So the email notification did not come from CEO Vishal Garg. It came from the CFO of Better.com. So just really ugly, and just I don't know what to make of it, really. It's not. I always thought Vishal was a super sharp guy, very driven, but man, it's all unraveling.
Some agency or something should do a case study on how not to treat your employees and lay off people and downsize a company, because it seems like they've checked every box on what not to do.
Yeah.
Well, at least they got a check. It could have been just a box full of your stuff on your desk and the door.
Yeah, that's true.
Question: is this a smoking gun? Are there bigger problems there? Are there other things under the hood that we, are going to hear about or we don't want to hear about?
I don't know.
And then my next question is this a canary in the coal mine?
Yeah, that's a good point. I mean, I don't know. I mean, is it just the real estate? I mean, they aggressively hired. I mean, they went from 1,000 people to 10,000 people in a year and a half, and that's pretty rapid. I actually refinanced my mortgage with Better about a year ago, and it was a fantastic experience. Really, the best experience I've ever had doing a real estate transaction, and so clearly they're doing some things right. They're doing some things right.
Yeah, I mean, the technology seems to be, great from your experience. And I was going to do it through them, but I happened to do it through someone else. But it just seems like
Who'd you do it through? I'm curious because I did it too.
Mine?
Yeah.
It was Freedom Mortgage. It was a local mortgage lender.
I did Loan Depot.
All right, that was my other one I was going to try, but Better had great rates, and it was just a great experience. Anyway, let's move on. Earnings. Marqeta You wrote about this, I think, Andrew. They did earnings this week, $155 million in revenue. Still losing money, not surprising for a fintech, but they are up to full year revenue, $517 million. That's pretty decent. Total processing volume, 33 billion. I think Marqeta just continue to impress me personally, but their numbers aren't that great yet. But I have to see what their stock is doing. But what were your thoughts, Andrew?
Yeah, for some reason I love Marqeta, and it's one of these fintechs that is not sexy at all. I mean, there's no there's no shiny here. It's really it's the gears that makes things work in the background. But that being said, I think leadership is strong, and in leadership has created a platform and a service that has been able to execute rapidly and globally. And when I looked at the numbers first, I was like, they're losing, they're growing, yeah, but really, what Wall Street liked was their forecast for the coming quarter and the growth they were showing. And so today everything was down, but the shares rose in after hours trading after they released the numbers and the forecast was strong, and they continue to ink partnerships with important players around the world, and that's what you want to see in a market where you potentially have other competitors that can do similar products. But I think right now they're the horse leading the race, right?
Yep.
Yeah, the partnership point was, if you didn't bring it up, Andrew, that was my point. And so it's, when they start, the bench gets deeper with partners that good, clearly they're doing something right.
Yeah.
Yeah.
Okay, I want to talk about some fundraising. We had a couple of big rounds, or several big rounds this week. Two I want to mention here. First, Acorns, $300 million Series F. And this was interesting because Acorns was supposed to go public via SPAC this year, and that is no longer happening. They've canceled that deal. So they've raised another round to give them some runway. The round was led by TPG, many big names, BlackRock, Bain, Greycroft, several others in this round. I think it was also, Kevin
Durant.
I was going to say Garnett, but no, Kevin Durant.
A few years ago, maybe it would have been him.
Exactly. Kevin Durant was also involved in this, and they said they're going to do a traditional IPO now when they get around, when the markets are more favorable.
I'm an Acorns customer. I like the fact that it just takes a little bit off the transaction, moves it over, puts it in a nice ETF, or I forget their exact one. I have so many different ones these days, but it's a nice product that's doesn't cost very much and kind of has this self-driving aspect to it, which is nice, especially for the wealth management type tools.
Mm-hmm.
And all of a sudden, it's like 5 years go by, and there's a nice little nest egg for you. And it's, to me, I think it's a nice add-on to something else that's a bit more active in your portfolio or your financial life. And so, obviously, the SPAC move was good because of what's happened to that market. I'd be curious how the IPO goes, but they must be doing something right if they could raise $300 million in that pretty short of a time frame after giving up on the SPAC.
Yep.
Yeah, the SPAC angle there was very interesting, and the SPAC deal was valued a little bit more, and so Acorns had to kind of twist themselves into a pretzel to explain why this deal was better. And I think in the end it was, or it will be. I think the key thing here is that Acorns, they want to continue to roll out new services. They want to be kind of the next Robinhood. And if you look at the valuation of Acorns today, which is about $2 billion. Robinhood is about $10 billion, but Robinhood has about, I think, more than 2x, a little bit more than 2x the number of accounts. So I think that if Acorns executes on its mission, it's heading in the right direction.
Mm-hmm.
Now, when do markets recover? That's probably the big variable there, because we're all kind of fucked until Russia decides that they'll get out of Ukraine. So right. But yeah, I'd say it's a good deal. I think it's a good deal.
Yeah. Okay, so the other one that I want to talk about is LendIt. They raised $225 million Series E. The round was led by it was actually a Canadian pension fund, the health. It's HOOPP. I can't remember exactly what that stands for, but anyway, it was. LendIt have been around for a while. They had a phenomenal year last year. I chatted with the CEO last week, and they've done they did $300 million in revenue. Still obviously a private company. They launched a new credit card, because keep in mind the LendIt guys all worked at Barclaycard. Most of their management team launched the Barclaycard in the US in 18 years ago. But so they've got a lot of experience there. So now LendIt has a credit card, or a best egg, I should say, and they also have a financial health offering, which I think is a good move.
Todd, do you have anything? Do you want me to say something?
Yeah, you go on this one. I mean, I couldn't say it better than Peter. So
I agree. This is one I honestly I didn't write about, or I didn't read much into it, but I would say this, that as you wrote, Peter, that they are profitable, and I think that's probably a key thing in seeing a pension fund participate, saying, okay, they've turned the corner on that. You spoke to the CEO, and it looks like it's another leadership player where they're actually executing on the goals. They have the traditional experience, old banking experience, that they're leveraging to put the work in a fintech platform, and it's working.
Right. The only thing I'll add, being that I've thought of something now to say different than Peter, is we've seen Jeffrey up close. We went to China with him, and it doesn't surprise me the way that they're able to execute. I mean, it's talk about a steady leader. He's as steady as it gets, and seeing how he is and operates on a long trip when we went to China, it's very, very impressive.
Mm-hmm. Mm-hmm. Okay, let's move on. Upgrade. Our friends over at Upgrade, the Upgrade card has been recognized as the fastest growing credit card in America when it comes to outstanding balance. Apparently, there's something called the Nielsen report. I just saw the article that you guys published, Andrew, and it's the upgrade cards number 27, 27th now as far as total outstanding balances, which is pretty impressive. The only fintech company apparently in the top 50.
I give Renault credit for what he's doing, what he's putting together, and he's driving growth. And apparently it's working. It's sometimes he calls it a neobank, sometimes he calls it something else, but I think in the end it's going in the direction of a neobank. And I think we talked about this once before. He continues to say that he'll never pursue a bank charter, but I could see that happening, or I could see something else happening where bank charter enters into the equation at some point, because I think that just makes sense.
He just doesn't want to follow lending club.
But
yeah, true.
Okay, so we got time for one more story before we wrap. I want to talk about Roofstock. I think you wrote about this, Andrew. I love Roofstock. They had another big funding round, $240 million Series E, led by SoftBank. They have 15,000 homes under management, $5 billion in transaction volume now. Just Roofstock, I think it's a great business, a great model, unique. They've invented like a new way of owning homes, and I've just always been a big fan of Gary Beasley and what he's been doing over there.
Once again, credit where credit's due. I was kind of, when I got it, I'm like, wow, that's a good valuation. That's a lot of money. And then I went back to look at the last round that they did, and it was like only $50 million. They've figured out the secret sauce to the market that was previously untapped, and the guys they're nailing it for now. I mean, you can go on and you can buy a house and finance that house and generate income, and then when it sells, you get the capital gain, and you've never even seen the house, right? and I think for a smaller investor, that's really an awesome alternative, because I'm sure that we all know people that have invested in owning properties and rental properties, wherever. They're making it easy, and they're making, and the returns, if you look at some of the returns that they're talking about, they're really pretty good. Now the rental income, it tends to be consistent and whatever, but you're in a low interest rate environment, and so I think you're generating good returns. But if you can get that capital gains kicker in there, that's kind of a nice play. And one thing that they said, which I like, is they're looking into the short-term rental market, which I think it still has legs, right? The whole HomeAway, Airbnb, VRBO, Vrbo, whatever it is. I think that's very interesting too, and I think that they can add some velocity to that overall market. Where nobody's working in an office anymore, and everybody's moving around, and I think you have this whole virtual generation that this is just another path to invest, and at the same time people are more transient. So I was pretty impressed with what they put together.
Yep. Okay. Any thoughts, Todd? Should we wrap it up?
Wrap it up.
Okay. We are out of time. Thank you, everybody, for watching or listening. We will be back same time next week. But before I go, quick plug for LendIt Fintech USA, the biggest event on the East Coast when it comes to fintech in 2022, May 25th and 26th at the Javits Center. Go to lendit.com. Go register. Okay. Right. Thanks, everybody.
Thanks, Peter.
Andrew.
See you, Andrew.
See ya.
Thank you. It's good seeing everybody.
Yep. Bye.